Brad Williams, Frugal Finance. Let's talk about mortgages. Let's talk about the mortgage closing. FYI, I owned a mortgage company for a long time. I saw a lot of things not related to my practices, but from people calling in a sense of urgency, stating, hey, I got this problem. I'm at the closing. Documents are not even close to what I negotiated. What do I do? So the question here is, at the mortgage loan closing, do I have to sign if I don't like the terms? No. Now, that's the short answer. The long answer is, think of all of the players involved if this is a new home purchase. If you're refinancing, it's not a big deal. But if you're buying a home and you're a first-time home buyer, think of all the people that are involved. In other words, well, the seller is probably buying. That person who they're buying from is selling, who is then possibly buying. You could see there could be 4 or 5 transactions behind yours, which then puts the burden on you because you have an obligation per the contract to satisfy the terms. However, which is often overlooked, is if you can't find financing that is within your guidelines. In other words, you said, I can't afford a mortgage more than this or this amount and for these terms. And all of a sudden you're sitting down at escrow and you're looking at the documents, and all of a sudden your monthly payment is considerably higher. The terms are longer. The loan type is not what you agreed on. Yeah, it happens. It happens. It's not as, well, it was pretty bad in 2006, 2007 that led up to the crisis, the meltdown, the mortgage meltdown. I saw stuff that was just unbelievable. I was pretty much a white glove kind of mortgage broker. The people I talked to, the different lenders that I would submit my loans to, the stuff they'd tell me about was just crazy. But keep in mind, back then, all you had to do was sign your name. Literally, you just signed your name. And if you had a decent credit score, you'd get a loan. They're calling them NINAs. So no income, no assets. Yeah, no income, no asset loans if you had a decent credit score and you had a little bit of cash. So you could see why the market did what it did. Now it'll be interesting because here we are, February 2025, and this agency here who provided this document, they've been shut down. But it all leads up to this future as to what happens now that CFPB's gone. Are we going to see more shenanigans on the part of mortgage brokers? Mortgage brokers are notorious for doing this. No, you don't have to sign anything unless you're satisfied with the terms. However, you may be able to make corrections to the terms instead of walking away. Warning, you should never sign anything that you don't understand. Don't sign if you don't understand the mortgage terms or if you think that you won't be able to pay back the loan. If you are borrowing money to buy a home, you likely have a contract with the seller. The contract may limit the amount of time and flexibility you have to close the sale. The contract may also subject you to legal actions if you break it. There's also wording in your contract about your ability to get financing. If there are errors on the loan documents or things that were added to the loan estimate or the closing disclosures, which you should have received prior to your closing, you may be able to have those corrected at the closing. It is usually in everyone's best interest to ensure the closing can proceed. However, if you choose to walk away, you may also have options. Review your contract or seek the advice of an attorney to determine what options you have if you decide not to take the home loan offered for the closing. You may be able to secure a new mortgage or extend the period to close the sale. However, if you can't do so, you may lose the deposit you paid to the seller when you entered into an agreement to buy their home. The seller may have other legal rights against you. If you have a contract with the seller, review the mortgage contingency clause in your sales contract, also known as the financing or loan contingency clause. It will tell you whether your deposit will be refunded if the sale is canceled because you're unable to get a loan. If you have a problem, well, you can't call this agency any longer, and you're not going to have any luck calling Fannie Mae or Freddie Mac. It'll be at a state level now. The FTC, they don't handle the mortgage side. Ginnie Mae, that's a government national mortgage. they may be an avenue, but again, you're going to need to be aware. You're going to need to be cognizant that your rights as a borrower have been diminished. Comment, let me know your thoughts on this and any remedies. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.